Deciphering the cash flow statement. The cash flow statement measures the amount of cash your company generates and uses during a specific reporting period. That's typically a business quarter or a financial year. This includes where it comes from and where it goes to. A cash flow statement provides important information regarding your company's ability to generate cash, pay its debts, make acquisitions, survive market downturns, invest in growth, pay dividends to shareholders, and all other forms of exercising financial strength. The balance sheet and income statement reveal valuable information about your company, but you cannot tell from them how much cash was generated during the reporting period. You also cannot determine how much cash was generated from normal operations as opposed to investing and financing activities. Such knowledge about the nature of cash in the company is necessary when trying to assess the health of your company and how you can help grow it. A cash flow statement reports how a company gets its cash and how it uses it within three main activities: operating activities, investing activities, and financing activities. Let's take a look at operations. This includes the company's net income from regular operations with adjustments to present the net cash by the end of the period. Such adjustments include items as depreciation, accounts receivable, prepaid expenses, accounts payable, and others. Investing. Investing reports the net cash used in investing activities by including the purchase or selling of any asset in a given period. Financing reports the net cash provided by financing activities by accounting for any received or paid for loans, sold or repurchased stocks, and dividends paid. The cash flow statement formula is simply cash from or used in operating activities plus cash from or used in investing activities plus cash from or used in financing activities, and their sum equals the net change in cash. The cash flow statement begins with net income from the income statement and shows how it is collected as cash. Adjustments are then made for investments and financing activities to end with total cash and cash equivalents. A quick note on cash from operating activities. This number had better be positive. Unless the company is new, then it may be the initial spending to get the company started that contributes to such negative cash flow. But if the company has been operating for a while and it has negative cash flow from operating activities, there is a good probability the company will not be able to sustain itself over time. The cash generated from operating activities should be progressively increasing from one year to the next. This reflects that the company is generating more cash as it grows. Management is developing a better understanding regarding the use of resources and the nature of the business, and operations are being done more efficiently. If the cash flow from operating activities presents a significant deviation, whether positive or negative, or no growth at all, it is highly beneficial to investigate why this has happened. In the case of increase, it provides a better understanding of the positively influencing variables. And if a decrease, it is essential to detect where the setback is and attempt to solve it. A quick note on cash used in investing activities. A positive number suggests that an asset or a number of assets have been liquefied. If it is a negative figure, then it indicates that the company is investing in assets, which is necessary to maintain the current assets and acquire new ones to support future growth. A note on cash from financing activities. A positive number indicates that the company is either borrowing money or issuing stocks. On the other hand, in the case of a negative figure, it is fair to comprehend that the company is using cash to issue dividends or repay debt. If you only have a couple of minutes to look at a cash flow statement, quickly look for the following four: cash from operating activities, growth in cash from operating activities, cash used in investing activities, and cash from financing activities. Cash from operating activities. Look for net cash from operating activities. This number had better be positive. For a startup, the number can be negative since it will be spending cash to get started. But for a mature company, a negative figure here is a very bad sign. It is unlikely to survive. This is by far the most important line on a cash flow statement. Growth in cash from operating activities. Ideally, you want the net cash from operating activities to be increasing year after year. This means that the core business is generating more cash as the company grows. The company's operations are becoming more efficient and there is better allocation of resources. A major change from year to year, whether positive or negative, necessitates that you ask, why? Why is this happening? Cash used in investment activities. A negative number here is not a bad indicator at all. It means that the company is making investments to support future growth. Not to mention, investments in assets are necessary to maintain existing assets. Cash from financing activities. A positive number here means the company is borrowing money or issuing stock. A negative number could mean the company is using cash to reduce its debt or provide value to shareholders. Let us take a look at an example of a cash flow statement for Eman's pharmacy shop. Here we can look at the net cash providing by operating activities. These figures indicate that Eman's pharmacy has a healthy cash position. It is currently positive and has had a healthy increase from the previous year. Eman's pharmacy is exhibiting healthy growth. Net cash used in investing activities. These figures, despite being negative, actually indicate that Eman's pharmacy is healthy and making good investments for growth in the future. Net cash from financing activities. These figures indicate that Eman's pharmacy is undertaking activities to generate funds for the company. Many companies do not rely on organic growth and depend on various financing activities to accelerate growth. Finally, cash and cash equivalents at end of year. Once again, healthy numbers and a very healthy increase means Eman's pharmacy is in a good cash position and has excellent prospects of growth in the following year. Now let us take a look at a real cash flow statement that is very relevant to you. The following is an excerpt from the Etisalat Group annual report for the year 2012. Now that you have taken a quick look at a cash flow statement example, let us break down the major components of a cash flow statement. The following is an excerpt from the Etisalat Group annual report for the year 2013. First important item is cash from operating activities. This is the most important item on the cash flow statement. Net income is not a sensitive measure of cash flow, since the company may receive booked cash or repay booked expenses in a different period. Cash from operating activities shows the actual cash flow from operations. And for a company to be healthy, this number must always be positive, unless a company is just starting. Cash from investing activities. A healthy company frequently uses cash in investing activities, so it is not surprising to find this item in the negative. It means that the company is taking money from operating or financing activities and investing it in assets. It is useful to look at a company's or competitor's investing activities to get a sense of its growth strategy. Cash from financing activities. This segment shows cash in and out from financing activities. It reveals how a company is financing its business. Is the company issuing stock to generate cash? Is it repaying loans? Is it paying dividends to shareholders? And so on. Finally, some points to remember about the cash flow statement. The cash flow statement measures cash generation. The primary sources and uses of cash are operating activities, investing activities, and financing activities. The cash flow statement basic formula is cash from or used in operating activities plus cash from or used in investing activities plus cash from or used in financing activities, and that equals the net change in cash. A cash flow statement begins with the net income from an income statement. It then makes adjustments to calculate cash flow, and finally ends with cash and cash equivalents, which is where the balance sheet begins. Cash from operations is the most important number on a cash flow statement. You want to see it increase each year. Cash balances might not increase because of other strategic uses of cash. Everything impacting profit and uses of cash also affects the cash flow statement, such as cost reductions and increases in sales.